Rich Dad Poor Dad is a classic that takes you on another level of financial intelligence. Hello, book lovers. Welcome to another episode of Book Review with Shalom. So on this episode, we'll look at a very important topic. And if you are in Nigeria, you would have had people make statements like, school na scam. Is school really scam? Is education really scam? Anyway, this book we'll be looking at will try to enlighten us about how we can help grow our finances. Most times people believe that school does not give you the right information you need to pursue finance in life. But this book we're looking at helps to balance that information that is gotten from the society. On this episode, we'll be looking at Rich Dad, Poor Dad by Robert Kiyosaki. Now, in his book, he tries to explain not just the importance of learning finance, he also explains the fact that school is not really wrong. But what is wrong in school is the fact that they do not teach you finance. They do not teach you how to manage, how to grow, and how to keep your finances. So he tells the story about his childhood and how he comes from a family which we would call a poor background or probably an average background. But he tells the story of how at the age of 9, he desired to grow finances because he had seen other children enjoy privileges he couldn't enjoy because of his family's financial status. So he had this friend who was called Mike, whose father was not really literate, but he saw that this man had advanced in the world of finance, and he decided to learn from his father. Now, meeting his dad, which he calls the rich dad, he decided to ask different questions, and his father had to make them go into the real world at the age of 9 to start working in his father's store, the rich dad's store. Now, all through, there were things they needed to learn from Rich Dad. Rich Dad taught them a lot of lessons, and this is what he has conveyed in his book, Rich Dad, Poor Dad. His father was educated and did not really understand financial management, while Rich Dad was not really educated but understood financial management. One of the first things Rich Dad taught them was that you need to manage your emotions when they come to money. You need to manage how you see money. You need to manage how you desire money. Your desire for growth should supersede your desire for just money. So he had to teach them to work and receive just few pennies. And it was annoying because at first they were kids. He was just at the age of 9 and he didn't understand why he wasn't paid well for working. This brings us to the first point which Dad taught them, which says that you shouldn't work for money, but rather money should work for you. Does that make any sense? Because it is expected that when you go to school, after school, what you do is to pursue money. So literally you're working for money. But Rich Dad says most people spend time trying to earn salaries. Most people spend time trying to get paid by the government. And after that, they pay tax, which in other words, they return the money given to them by the government to the government. So Rich Dad explained the fact that instead of focusing on working so hard to receive salaries, you should focus on building assets. You should focus on building things that will produce money for you even while you're not working. So it's not just about working, but it's about you having enough assets that even while you're not working, your assets will be able to work for you. So he told them that the first principle is rich people do not work for money. They allow their money to work for them. Well, at the age of 9, that information did not really make any sense to them. But he went further to teach them that rich people do not just acquire liabilities, but they invest in assets, not liabilities. In that point, he says they know the difference between asset and liability. Have you ever thought about if you buy a phone so expensive and you check there is no source of income to help keep maintaining that phone? So Rich Dad is saying rich people focus on building more assets than liabilities. What are your assets? What do you think you have that can help produce money or can help increase your financial status in life? If all you have is what you spend on, then you are not growing your assets. You are actually growing your liability. Let's take an example. You want to buy a house. Well, we say a house is an asset and it will appreciate within time. But you decide, instead of buying a house, you decide to buy a car. The car will need maintenance. The car will need a lot of other things, which the house might not necessarily need. Even if it does, at the long run, you'll be able to sell it at a higher price than the car. So you will be able to differentiate between your asset and your liability. And Rich Dad says, rich people mind their business. What does it mean by rich people mind their business? Does it mean rich people do not talk to other people? Imagine you meet a rich man and you decide to wave him and he just doesn't pay attention to you. No, that is not what he means. He means that rich people are not really concerned about what they do as a profession. Rich people have a source of income that they are more concerned about. So let's assume you work in a government organization and you are receiving salary at the end of the month. It is just okay for you to just work there because you have gone to school to study mechanical engineering, and so you feel mechanical engineering is what you do, and you're not concerned about another business that will be able to grant you more income or be able to add to your financial status. So he says rich people spend time minding their business. Your business is what adds more to your finances. So you can be a banker and you have several businesses. He encourages people going into real estate. He says this produces a lot of money at the long run. He also used the example of McDonald's. He says this person was known for his hamburger, but he had other businesses that helped to promote the business we know he does for fun. He says he loves making hamburgers, but nevertheless, he was into real estate, which was his main business. And the last thing he says, which we'll be discussing tonight, is the fact that he says you work to learn, not just to make money. So what are you doing? Are you a business person? Are you a banker? He made an example. Have you seen a book and you look at the book and what you see is bestseller? He says that people don't say best writer, people don't say best author, they say bestseller because your ability to sell is what matters. So whether you're a banker, whether you're an engineer, whether you're a doctor, you must be able to sell. So while you're working, develop your selling skills. Wherever you go, wherever you find yourself, you must be able to sell to make more money. If you're into real estate, there is something you're giving back to the society and you're expecting to receive more finance at the end of the day. Rich Dad Poor Dad is a classic that takes you on another level of financial intelligence. I would recommend Rich Dad Poor Dad to everyone watching this video. First off, because it has helped my life. Secondly, because I really believe that beyond the four walls of school, you can learn finance as another advantage to you. So, thank you so much for staying on this episode. I hope that you're able to get a copy of this book and add to your financial intelligence. See you on another episode of Book Review with Shalom. Remember to follow us on Facebook, Shalom Sunday, and also remember to subscribe to our YouTube channel, Book Review with Shalom. Bye for now.